Here's a quick concept check for us on the trend is our friend. We're looking at an example of Visa on a weekly time frame. We're looking at 10 years worth of data here. And you can see a pretty consistent strong uptrend on this weekly time frame. And what the trend is your friend means is that, one, we're seeing a long-term investment business cycle where people are buying this asset. It's continuing to appreciate in value. And again, people continue to buy and press prices higher and higher over time. Well, what the trend is your friend really means to the average trader is the opportunity to buy low, sell high. So here's an example. I'm on a daily chart now where the market went through a little rough spell back last October, November, December, back in 2018, depending on when you're watching this. And the market reversed and started to break out, and it gave us a breakout above these old resistance highs. So it went from kind of chopping sideways to downways to breaking to a new high. Well, because of the pre-existing upward trend, the trader knows that they have an increased probability of profit when they're buying that breakout after the protracted uptrend goes through a correction. And then each subsequent little dip after that initial breakout occurs presents another opportunity. So here's the breakout, initial breakout we're talking about. First little retracement checks right there, and you get a nice follow through to the upside. Trend is your friend. Okay, prices pulled back down, old ceilings, old resistance high. Bring that over here, becomes the new floor, coincided with that upward rising 20-period moving average. A little green buy candle in there. And again, if you bought that retracement, boom, you were able to buy low and able to sell high. Here's another sideways chop. It's called a bull flag pattern inside the upward context of a trend. You either bought the dip here or you caught the breakout here. And again, you're able to buy and prices kept persisting higher. Trend or tendency of price over time is really what we're after. So again, prices will, chop around a bit from time to time. Occasionally, a trend will go through corrections. But if you buy when it breaks up to new highs in an existing upward trend, or you buy the dips when prices come down, when you get that confirmation that they're heading back up, that means you could be trading with the upward trend. We can, of course, do the exact same thing in a downtrend. Here's a chart of GameStop, company that's been in quite a bit of trouble. Here's the weekly time frame. It's been going down since 2014 highs. It's been getting beat up. And you got a company with a struggling and failing business model and establishing a big, strong downward trend. Well, that stock's getting down towards $5 now. But if you had traded breakdowns and retracements within the context of that trend over the last 5 years, you stood to make a lot of money selling high first, then buying low second. And this is why traders love trading with the trend, is because they get that potential for dramatic price changes over time. And they can make money both in the short term with a little bit of timing and over the long term with position trades that match their bias.